Greetings, traders. How's it going? How's it going? How's it going? It's your boy MC Fire coming at you again with another market recap for Sunday, 1 January the 19th. So yeah, man. Loving last week. Absolutely crushed it. A couple winners, one loss on the roster. So we'll be breaking down a couple of those, really kind of seeing the continuation of those. Losses are lessons. And as I told you guys, we're going to be queuing in a potential video. We're just kind of go over all of our losses for 2024. Uh, the reason why we're going to do that is because too many times, too often, in this environment, people really just focus on their winners, and they never really kind of key in and give the lessons. If losses are supposed to be lessons, how come nobody really focuses on it? So in this channel, we're definitely going to do that. So if you like this channel, stay tuned for that, for losses or lessons. But let's get right into the plays and setups, baby. Let's dive right in. So, out the gate, right, we definitely want to talk about what's going on in the markets. But if you guys know, here, discretion is key. We let a lot of things pass that can get us into hot water. So we just take the best and most optimum setups, and kind of how we find the best and most optimum setups is we let the data do most of the talking for us. So in today's discretion, sorry if that was a flashbang to you guys, but in today's setups, we definitely want to make sure that we're using data to determine how we go about picking what we pick in the market. The first thing we're going to take a look at is the stock market performance. We got to shift it over a little bit because I was trying to zoom in. You guys kind of told us, and we definitely listen over here on this channel, that some of the bar charts and the graphs and some things were kind of hard to read because they were too far. So we went on and we're going to make sure we zoom in for all that stuff. But essentially, right, this is one of our biggest weapons here on the channel to go ahead and say, hey, what is beating the market? What overall is kicking the market's butt? The overall S&P 500, what's beating the average? So many people get beating the average wrong. If you can consistently pick what will beat the average, you can beat the average, right? And we just use data. We just use data to kind of determine what will beat the average. The average is the S&P 500, which is this black line, and then all the lines are the sectors. All the other lines are the sectors that make up kind of the S&P 500, S&P sectors for 1 year performance. What you're seeing is each sector has a different color, and the colors that are above the S&P 500 is the kind of breakdown and distribution above the S&P 500, which is the black line. So if you're above the black line, you're beating the S&P 500, so to speak. And if you're below the black line, you're not beating it. And we can kind of determine really quickly who's been consistently beating it. If you're new to the channel, we kind of know that these two guys right here, communication services, info and tech, have been consistently beating the S&P 500. If we look back, the red line and the green line a lot of times are above the S&P 500. So if you're looking for outperformers, this is where you can kind of start in your outperformers right here, these two right here. Then also, if you look back, the one that kind of tracks with the market respectively is financials. Kind of tracks slightly above for a good part. There's a period where it kind of dipped below down here, but it essentially can track above the market for a good portion of it. So when times are good, it's above. When times are not so hot, it's below, right? And so let's go take a look at some. We'll unselect a lot of these guys, and then we'll look at our laggards here. We'll go look at the real estate and energy sectors, just to name a few. And we also have healthcare, I believe, looking a little rough. Now, as you can see, the energy sector is making a pretty fat rally. We kind of made some money on the XLE, which is the energy ETF. Also, healthcare is a little bit of a laggard. And I also believe utilities is above right now. So we'll bring utilities to the front of the classroom in a second. There's another one that's kind of stays below the market quite a bit. The consumer staples. I can always forget this one. Yeah, consumer staples. So consumer staples either tracks with the market or is below the market a lot of times. These are going to be your laggards, right? Your laggards, your laggards, your laggards, and also sometimes consumer discretionary. Here recently, though, consumer discretionary tracked above above the market. We'll get rid of energy. Attract above the market here recently after essentially post November. Remember going into the folly days, going up in November, it went up, right, and it's like slightly pulled back because after the holidays, a lot less spending, right? But it is an uptick. The overall market is pushing up, so you got to keep that in mind. Just because it's doing better than the current outlook of the S&P 500 average doesn't mean there's a lot of sector rotation into that said ETF. There is a lot of high tide raising all boats, and you're seeing that over the last week. And so, really, your laggards, if you're looking for value, you've got healthcare value can be found there, and real estate value can be found there. I think a month ago, roughly, we told you guys where the value was in one of our Sunday night calls. We had XLRE on there, real estate on there, and healthcare on there. And we actually did take a play on healthcare. We did take a play in energy, and we did not take a play in XLRE. So, two of these we did catch some upswing, but there was a lot of pull to the downside. We're going to go over one of those plays in our market breakdown coming up. Also, we do like to bring to the front of the classroom a lot of times the what the financial news is for the week. So remember, this is week of the 19th. We'll refresh it. Don't worry, guys. This is previous week. We're going to refresh that. So if you guys are tracking, I think last week from Wednesday or from Tuesday to Thursday was market news. If you look here, nothing Monday. We're just basically looking for red. Tuesday coming in strong, core PMI data. Um, is this still last week? Let's go this week, please. Thank you. Yeah, I was about to say it is not the same for sure, right? So coming in strong here, going into Tuesday, we can look at if you're trading the Canadian dollar, they are having essentially red news as well as you've got the British pound doing the kind of the same thing. Let's look for the US here. US unemployment claims are on Thursday. So we're out of the weeds for Monday, Tuesday, Wednesday, thank goodness. And then Thursday, look for unemployment claims. That's in red. And then you also have all WEF annual meetings. So we kind of see what that is, but essentially there's going to be a group meeting there. You also get manufacturing PMI on Friday. So Thursday, Fridays are going to be your hot take days. Just keep that in mind. A lot of times it doesn't really worry about, we're not worried too much about these takes. If you're a swing trader, if you're a day trader, definitely keep these days on your watch list. Let's go over right now and then take a look at our Thinkorswim, and take a look at the overall like SPY and the Qs and all the other good stuff. So we've got SPY here. Did have a pretty decent 1, 2, 3, 4 days, 5 days. So the last week was really good. The Q's kind of setting into the squeeze here, but not like an extended consolidation. It's really been only the last 2 days as they kind of get back to net neutral here, getting close to the 8 pair moving average on the weekly. So just kind of keep that in mind. It did kind of react off the 21 peer moving average, and it has since pushed up above the 8, but has not broken the previous week's high. So watch out. There could be more downside to come this week. Just keep that in mind, right? Don't just go, buying things just because. You need a system, you need a setup, and you need a trigger. So keep those things in mind. So SPY looking pretty good. We'll see. It is slightly pulled back in after hours trading. That was as of Friday. So we can go look at the ES/ES to see what it's currently doing. I think it's since after hours, slightly pulled back, but is kind of it's green on the 10-minute chart, so it's not too bad, right? We're hoping that it continues, so there could be more juice on that bone from Friday. We're gonna look at the Qs and IWM next. So yeah, I'm loving what we see on the Qs. Pretty massive candle here. We love indice candles for the setups, right? Because if we see a crack of those, it's kind of hard to fake the overall total reaching market. if you see a pretty downsized candle, these things play out pretty well. Here's one, here's one, here's one, right? We took this one, massive returns, 1, 2, 3, 4 rolls, pulled it off here after we took massive profits. Rolled it 4 times, meaning we took a decision and we made profits on all four positions. But there was a couple of times when you could have did that. Remember, we are 2 bar professionals over here, so looking to the left, 2 bars kind of gives you your stop. It doesn't have directly be directly 2 bars. Let's say, for example, like it doesn't make sense for this to be our stop. So if we look to the left, the second bar might be down here where we take the stop as a 2 bar professional. No more than 2 bars on a setup. We love our setup, but we do give it some wiggle room. So right here, same thing. This came in 1, 2, and on the third day, boom, fire to the upside after the cross. You would have took that. It's in this support and resistance zone. So upside to here is highly probable, which it did do. That would be the first sign of danger. We take that position off, roll, make a decision, whatever. And so seeing this here off of this, what seems to be like a really large bull flag, pushed up, kind of chopped through here on the pennant, and then now it's pushed above that. So if we see a setup above there, remember this, it respected the support, kind of reacting off that on Friday, and it's up here. Really, really powerful stuff. That means buyers are stepping in. You also do have a squeeze if you're a fan of John Carter's TTM squeeze. There is a squeeze here setting up. So if we get a break to the high, look to potentially take that position as a hot take. No joke. That's kind of how we're going to go through the sequence, the formatting of these Sunday videos to not make them too long. We're essentially going to go over the overall market, what the news is coming up. Then we're going to get to the plays that, we might have recapped some of our plays that we're currently in, stopped out, whatever. The hot takes, things that you definitely need to put on your list for the week. No joke, definitely watch, because this is kind of what we put our bread and butter on. These hot takes, potential setups you could take in the weeks following, right? We typically like to get our plays anywhere from 2 days to 3 weeks out. So these hot takes is going to be the best thing. We're going to put them more towards the front end of the video so that people that just need the hot takes and then they got to go to bed or something, they can have those. And those who want to stick around and hang around for extra credit, we can get into that, look at all the ETFs, and we can learn something, right? So we got a little something for everybody, but essentially this is interactive. So if you guys like stuff, put it in the comments. If you guys want me to change some stuff, put it in the comments. I'm open to both. We're going to go look at the canary in the coal mine. IWM, AE, the Russell. So if you guys notice, remember I told you that the Russell reacting off this 226 period 3-4 level, that 226.62 level is going to be kind of rough, right? That 226.62 level, that level is really what we want to see break for continuation to the upside. It did come up here on the week, did test that, and then break below that. So we're going to put another alert there. If it can break that, awesome. Also, there is a squeeze. There is a squeeze. Again, there is a squeeze on the IWM. So we're seeing a couple setups happening on the Qs, couple setups happening on the IWM. Watch that for the squeeze. There is no setup candle from like our personal, the way we like to trade, but we always want to respect the low volatility plays because it means premiums are in effect, right? If you take this from a traditional standpoint, is it above the 8-period moving average and above the previous week's high? It will be at the break of, let's see, 227.21. So 227.21 from a traditional standpoint, you could take the play. There would be no harm, no foul there. Still be a 2-bar professional though, for sure. So that's your canary in the coal mine. We'll also take a look at the dollar there, UUP. There was a couple setups a couple weeks ago on the UUP, right? Setup candle here at green territory. You took that 4-day move. Remember, we take our plays anywhere from 2 days to 3 weeks. So make sure you get enough time on your options if you do get them. That's not financial advice, but I say it's Warren Buffett's old adage: it is better to be in time in the market is better than timing the market. So time in the market is 3 weeks. We like to kind of give us enough time most of the time. And we'll take a look at the VIX and then a new ETF that kind of was brought to my attention. So the VIX, anyone who's tracking, is like your fear indicator. and it is since dropping. It was, I think, at the start of the week, kind of high at like 16, and then kind of faltered down to the 15 region. So really, 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 really good. At the top of the month, though, we were in like almost the 20s on the VIX. So a lot of fear in the market. Market was kind of selling off, but it's since kind of recovered. Watch out for that. You can also see with the VIX, it does kind of spike up to around the 20 to 22 region. So puts on the VIX might be in play if we can find a good setup on the VIX. We also have a new ETF. Look at this, war. So ETF, global solutions for like war. And that's literally ETF. It's only been around for a couple of weeks, like 3 weeks. So keep that on your radar. We do not have any kind of setup, but we wanted to buy a couple of shares just to kind of throw it in our basket and have it like tee up on our watch list kind of deal. So new ETF. If we go bring to the front of the classroom what this ETF holds, we will do that now just so you guys are tracking. I'm not saying buy this or go out immediately and take a buy on this ETF. We got it pulled up here in the holdings. But here we are. Nvidia is in this deal right here, General Dynamics, and let's see war stock profile, right? Let's go look at what this thing really is designed to do. So, U.S. Global Technology and Aerospace and Defense. This is a defense ETF. Defense ETF. It's been out for about 3 weeks. Advertised here on War ETF, and it was only been out here for about 3 weeks. So I do kind of look at some of these advertisements, like, ooh, this could be interesting. So if you create a new ETF, kind of want to know what the deal is, and if it's brand spanking new, and you have the ability to throw some get some Nvidia in there. General Dynamics is another name brand. Taiwan Semiconductors is another name brand. Raytheon, to name a few. KLA, big defense companies there. Probably somewhere in here, you probably have your Raytheons and your Lockheed Martins as well. If you export and see kind of like what is all in this ETF, you could probably do that. But really big names: KLA, General Dynamics, Rheinmetall, Taiwan Semiconductor, Nvidia. Definitely watch out for that. So computer chips to make pretty much everything that we use for weapons nowadays is essential. This is also why I like the markets, because you can kind of understand like why China makes a big stink about Taiwan, because they make half the world's computer chips, and really good ones too. So if they can control that market, they can control a lot of the defense market that makes some of the best weapons and the best chips for the economy as well as defense. So that's why I like the markets, because you keep up on why people do what they do as opposed to just what they're doing, right? So looking to take some just an early buy on War. We kind of have it queued up. We're only going to buy like 5 shares. Nothing crazy, just watch it. We want to have some more setup candles, print, and then trade it like we normally do. But for the preliminary, hey, why not take a buy? What does it hurt? All right, let's go kind of dive into some of the plays that you guys have been watching. We've been talking about over the past week. So AMD did take a bias buy on that. Has since started to push slightly to the upside, but watch out for some like reverse action as we get close to the 8. Remember, this moving average is a little wide, so we like to take, if you're on a reverse trade, um, on a reversion to the mean, we like to buy when things are expanded away from the moving average. So when the best time to take a reversion to the mean trade, in my humble opinion, is like at 3 ATR, when the price is at 3 ATR, the price is considerably far away from your moving averages, and the moving averages are probably as wide as possible. If we look back at an extreme example here, um very wide expanded moving average and way past 3 ATR, almost in 4, almost 5 ATR range, reversion to the mean. For us, the mean isn't the 21, even though historically it is. If something is in a power trend, let's say you get a reversion to the mean, it's likely to pull back to the 8. And we have done that a few times. We could look at UNH for that example, as to kind of show recently what we did. But at minimum, we're looking to get AMD at least up to the 8 before we roll, make a decision, take some profits off the table, and then move our stop loss up to break even. We also have on the board XLF. XLF is on the board. Remember, um, when you're looking at XLF, right? When you're looking at XLF, the reason why we took this play, the setup happened back here, massive run to the upside, gap and go, gap, slight pullback. We took that pullback on the buy, and it just ran to the upside. So precision execution, even on the day trade, waiting for it to get back to VWAP. If you watched our live session, we actually showed you that in the session. We actually showed you the pullback. We actually showed you us execute at the pullback. I even called out waiting for getting back to VWAP. So you guys can learn, hey, this, wait for it to come down and pick you up. Like we've kind of practiced what we preach over here. And we're like, hey, it's gap and go. Probably, but we want to wait at least till it pulls back to VWAP. There's going to be some profit taking on this bounce. Almost got to be. So he pulled back and then pushed. It was really, really something special to see. Also, you got a squeeze that essentially 1 day squeeze fired off. We took that on the day. Shout out to us there. Still kind of going. I believe there is more legs on this turkey, so it could run. And we'll explain why here on some of the recaps. Well, actually, we need to explain now. So if we go look at a lot of the major players here, you got Goldman Sachs, Wells Fargo, Morgan Stanley, JP Morgan, and BlackRock. We're going to kind of hit those really quick, right? You got Goldman Sachs here. And if we look at, we're going to do all this on the flex grid. So I can tell you why. So you can see the way this kind of sets up is you see it kind of pushes, goes flat, and it continues. We like that. It's like a track runner running, taking a slight breather, and then pushing again. So if there's more room, we could see that potentially as no major pullbacks, no really sunken heavy pullbacks, deep pullbacks. So Goldman Sachs is kind of doing that. That's a major player in the XLF. You also have Wells Fargo. Where's Wells Fargo? Wells Fargo. Yeah, Wells Fargo kind of doing the same action, pushing, and then flattening out there. That's very, to me, that's kind of a bull flag, extremely bullish, in bullish territory there. Morgan Stanley, as well as JP Morgan Chase. Yeah, you got Morgan Stanley kind of doing some similar stuff, going double green here, pushing, and then kind of chopping sideways, just slowly pushing up. We really like those setups to the upside. And all of these are in the XLF. JPM, sorry. Fingers moving faster than my brain. So major, get this respecting of this 254.54 level. It doesn't have to be perfect. It does respect it. Kind of peekaboos below and then pushes and then it's super flat at the top there. I consider that pretty bullish there. Way more bullish than this. Remember, it's having to respect this 254.42 level. And if it's respecting that and it breaks that to the upside, awesome. You also have, last but not least, BlackRock. Phantom Menace here. Very similar story. Cross to the upside, kind of flat. So there's a little meat on that bone too. BlackRock is a little extended though. It doesn't have the same pattern as the other guys. But would it come in flat here and kind of resting off this 1001 level, 1001.94, that necessarily is, to me, slightly bullish. If we go back and we look on this chart here, it does have a setup candle right here, and it just got through earnings, which earnings wasn't too crazy, wasn't too bad either. So with earnings, didn't do too bad. The whole sector actually did really good. And then we've capitalized that on XLF, and we called that out to you guys as well. So that's the reasoning behind the XLF in that play. We're going to go to one of our other plays, OKE. Right, as you guys note that we did take OKE on a traditional standpoint. We really just liked the way it was setting up. Really nice, drastic pullback. Is very like stacking weekly candles that are positive, one slight pullback. That was like, okay, it pulled back. Let's see if we can get a break of the 8-period moving average. It did. And then some 1, 2, 3, 4 days of fall through there. We went on and took the roll. So we took some profits off the table and we're moving our alert / stop loss up to break even, right? There's no need to turn a winning trade into a losing trade. So barring any major gaps, we should end this net positive, protecting our capital, right? We don't look to see an expected roll to the downside fully, but if it does happen, it could happen. We'll be getting that around the halfway mark. Last but not least, ETN. So ETN, no real follow through, but what you do see is 3 dots on the on the squeeze there. This indicator down here is called the squeeze. That squeeze is basically just going to tell you that, hey, volatility at the time is kind of low, which means the price action is kind of tight. Price action is tight, and that could set up for a really big move. If we look back here, when the squeeze sets up, after a price action kind of squeezes tight, like over these 3 days, there's typically an explosion one way or the other. Same thing here, 1, 2, 3, or 5 days here of a squeeze throughout this area right here, and then there's a pretty big juicy pop there. It doesn't always have to be the upside; it could be the downside, but it doesn't always have to fire. But with our setup, though, the likelihood of it firing is slightly increased, especially if we get a peekaboo above this high there. Remember, we took this play off this setup candle. So if this one breaks, we could potentially look to take an ad there as well. But remember, we're two bar professionals, so we'll look to stop out here. And the first sign of danger is at the 368.27 level. Not necessarily from a level standpoint, because the first sign of danger from a level standpoint is kind of like right here. But we want to have enough risk to reward to let the play kind of run out before we take profits. And then our upper strike is kind of up here. So we'll let that bad boy run. Woo woo. All right. So hot takes. This is what you definitely need to take a pen and paper out and take the hot takes for educational standpoints. So NFXL, Netflix, good old Netflix. Hot take on Netflix. Netflix setup candle definitely in the sustained uptrend, pulling back below the 8 pair moving average. So if it does crack that, it will be above the 8 pair moving average and above its previous week's high with a setup, right? This is kind of what we want to see. Watch out for earnings on 121. That's essentially Tuesday. So watch out for earnings on Tuesday. If you're a person that can't handle the earnings, if it takes a big giant dip, you can't hold on, then definitely don't take the play. Wait till after earnings, see what it does. If it maintains, then take the play, right? But you want to be cognizant that earnings is there. Don't say I didn't tell you. Okay. Also, volatility squeeze in earnings. So sometimes instead of buying options, selling options might be your best bet. Keep that in mind. So, but set your risk accordingly. AAPL Apple, also on the hot take list. Also on the hot take list. Watch out for that. Remember, Apple is still in an uptrend, although it's been struggling the last 4 weeks. So just watch out that this could be a recovery period for Apple. Again, also Apple earnings are coming up on the 27th. You have enough time. So if it gaps above our setup candle here, if it moves above this 232.52 level, if it moves above that, you can see it potentially really get cranking. You're going to get some resistance probably at 237. So watch that. But if it cracks that, this could be a good opportunity to add to your position off that break. So you get a confirmation here, confirmation here. If it does, it really could get cranking all the way up to 250. You probably can get some resistance at 245 though. So keep track of those levels. Pause the video if you need to keep note of those levels on your hot take and just see how it plays out overall, right? For that. SRE. There's a lot on the board, but we really these are the discretionary. So those are two to the upside. Now this is one to the downside. Remember, we're on a downtrend in SRE, have been moving and pushing down pretty vigorously for the past month and a half or so. Month in 3 weeks. So since essentially 11/25 all the way to now. With that, because it took a pretty nasty drop almost down to 3 ATR and then pushed up to the moving average, it's very tight. This is a springboard for a setup to the downside. Remember, we like to buy the dips, short the rips. So in an uptrend, we want to buy that dip, wait for it to kind of come down, pick us up, and then it takes off. And then in the downtrend, which it has established itself as a downtrend, we want to wait for it to establish that it's in a downtrend, come up and pick us up for continuation to the downside with our setup. Now, the only mismatch in confluence is unbalanced volume is kind of to the upside this week. So just watch that. We want price and volume to really be slowing down there. So price lowering, volume also lowering. That's recipe for a pretty big move to the downside. XEL is next on this list, right? In the uptrend, did crack this setup candle here to the upside. So remember, 2 bar professional, that's essentially right here at the base. You do have enough wiggle room to the upside if you're looking to take this all the way up to 73.3. So If you're looking for it to complete rotation back to its resistance, it's possible. I believe highly unlikely in 3 weeks. It could happen because look how far it moved in 1 week. Definitely increase in volatility over the last month and a half. So just watch um, Excel energy to the upside if that does happen. It's kind of lower on the setup list, but it's still there. So we got to give you a shout out there. CAN. This is one that we kind of threw into because this is what some people are watching. If you see here, it is a penny stock. So you can really crank in some leverage there if you go ahead and you got some capital to throw at a $2 play. But at break a high, the setups really are kind of the same, right? You get an uptrend, you see a nice pullback here, and then it breaks that. You take the buy, stop out at the low. If you put the stop here, or even a 2 bar professional, you can be right here. It pulls back a little bit, gives you an opportunity to take a add-on buy. You take that, and then it just really gets cranking. So the setup works: $2 stock, $5 stock, $100 stock. We're playing off people's fear and greed. We're playing off the ability for people that got into a play in the wrong trend and it goes against them, having to get out of the position and fuel our play to the opposite direction. The IOU system is definitely in effect. So even the momentum is like double yellow. And if we get that, there's this added confirmation for seeing. So watch that. But of course, set your risk accordingly. Moving on, we've got DuPont. So DuPont, just like the other play that we broke down, nice little downtrends established. Went down all the way down 3 ATR. It pushed up through a nice selling candle right here, respecting the 78.51. So if we can get a break below 77.14, look for some continued downside, at least to down here, where we can potentially see finish of rotation. It's going to give you a really nice risk to reward too, and it's very reasonable that it can get there in a short period of time. So just kind of keep that in mind, man. Seeing this level actually pushed, but it's respecting that level. See what I'm saying? So yes, we just printed it, but if you look back, it's the level's been pretty established from way back then. So I believe that it has a very good probability of testing this resistance, failing, which is already starting to do if you look at the daily with our setup candle, and then getting washed to the downside. So watch DD, that is on our hot take list. Please make sure you keep that in the nose, put a alert on it, do whatever you got to do. IBM, hot take. Yes, sir. Same deal, squeeze. Let's take a note here. Confluences. Number one, you got a squeeze on the board. You've got unbalanced volume on the board, right? It is in no man's land, but it is respecting the 21 period moving average on the weekly. That's kind of what we're noticing. And you got a setup candle here, perched really pretty to push and finish rotation. That's what we like to see as well to the upside. Now, keep in mind, don't say we didn't warn you, that on January 29th, there is earnings. Again, there is earnings. There is earnings. And also keep in mind on that same date, what's happening on January the 29th? Fed watch meeting, January the 29th. Sorry about the flash. Fed watch meeting. Let me zoom this in so you guys can see it. Fed watch meeting, Fed watch meeting, Fed watch meeting, Fed watch. So the Fed will be having its meeting on the 29th of this month. So things could get pretty dicey on that day for this stock. Just keep that in mind. Don't say we didn't warn you. Remember, our job is to kind of give you the do's and don'ts and the kind of get the highest probability setups that we can from a learning standpoint. So if you guys can get this potentially to the upside, if that's something you want to do, set your risk accordingly. Remember, not everything has to play out according to our plan, but you got to plan for when things don't go according to plan. So if you fail to plan, you're planning to fail. That's what old adage there. What else do we got? We got IBM, we got Oracle or RCL. So shout out to Oracle here. So in Oracle, a little bit of the same sauce there. It did push, and there's a slight pullback up in Oracle. It's not as potent because it's not green in red territory. There is some red reacting off these moving averages. So it's not the hottest of take. We just want to bring it to the front of the classroom for a little bit. Give you guys a heads up on Oracle. We also have Southern. So Southern Company. This is kind of what we're seeing here, right? It's negative. I'll go ahead and draw the downtrend. We like to establish our trend from the weekly chart to use a higher time frame before we go ahead and, because if you look on here, this might not look like we're in a downtrend to you. Some people look at things differently. We just want to have very clear rules and take the swings that have gave us the best results. So here you see downtrend. There's the dip. There's the rip right here with the setup candle and a nice juicy squeeze that hasn't fired to the upside yet. Southern hot take for sure. Look for it potentially even go down to 3 ATR or first sign of danger off this resistance. I'll mark that for you guys because essentially we want to just keep doing what works for us. Keep doing what works. Keep doing what works. Keep doing what works. Okay. We're gonna keep doing what works. So the beautiful part is if it breaks below that, we can at least see a test of the slow at support there at like $80 and like 30 cents or so. Southern Company. Look at that on the hot list. ADP. ADP is up next. So a little bit extended, right? We kind of don't like to see these really big fat red candles there. That is real volume, real pressure to the downside. It isn't a squeeze though. So definitely on our hot take. Like if it breaks above, it'll break above kind of in no man's land. Risk to reward is going to be, if I would say it like this: if there was one to pass on, this would probably be it for us. Even if it breaks above the high, it would definitely pass on. You got earnings coming up. It's already kind of pushed really good to the upside, right? But the risk is just too great. So even if we just take it down here, you got support right here. It could very well just break it and bounce. We kind of like something that like we did for Southern Company. Southern Company is kind of ideally what we want. We want to kind of push up into the moving average cloud and give us a nice little play to the downside where it makes sense, right? If it gets down there, we can take up the play off, or even like the play that we just saw in Oracle or IBM. So IBM, right, comes down in the middle of the road, but you have a lot more room to play with. Also, the risk on the candle, if you take the first candle, it's not that wide or it's not that big. So in an overall market uptrend, in an overall sector uptrend, the stock is in an overall uptrend. You get a setup candle with the squeeze looking good. That's kind of like, if we're taking plays, that's kind of what we want to see there, right? We can kind of move on. Let's see. Let's go back. Yeah, this is kind of what I wanted to kind of bring to the front of the classroom when it comes to risk reward. Do you see here? It's reacting off this level, and if we get a break below, yet getting down here is highly likely. So the risk to reward here is a lot better, right? You're risking one to make maybe 1, 2, 3, 4, 4.5. I think that's pretty good, right? So that's kind of what we wanted to bring to the front of the classroom for DuPont in regards to ADP. The risk to reward to us is important. So it's almost a 1-to-1 there. And we want like a 4-to-1, ideally in price movement. Moving right along, PEG. PEG, similar story. You got a 21 period moving average up. Yes, you do have a negative moving average cross, but look at that. I mean, it pretty much is saying, hey, yes, I'm down here, but I went sideways essentially for the segment we would classify as a downtrend. Never really pushed and then reacted. It just kind of barcoded around. So this is pretty bullish as it pushes out of that rotational zone. I'll mark that out for you guys. You can kind of see what I'm seeing there. Mark that out. So between here and here, boom, and we'll put that right here. So yeah, as it rotates kind of through there and then it breaks that, you can nice setup candle, which is building the orders up here. And if it breaks, I could definitely love to see PEG to the upside there. So watch out for that. We're gonna put this in yellow because we haven't confirmed that it's an actual trend, and we want to keep chart continuity pretty solid, right? For everybody, including myself. So yeah, that could be a pretty sweet play. We did get stopped out previously on this play. Previously on this stock, we saw it peekabooed above this, and then ended up failing. We end up closing out, and shout out to us, we did. That's why we bend our, but we don't break our rules. We didn't break our rules there. It did cross below that. We let it go, and then it just milled around. It didn't really push. So, and it did that for about 3 weeks. That's kind of why we use that as a good setup and a good rule of thumb, because it essentially just wasted the time on our premium. We've got our Rivian. Rivian. So if you guys like a little emoji cars, Rivian is your man. Yes, sir. So Rivian in play here, kind of perched off his 21 period moving average for the weekly there, and then got a nice juicy setup candle looking to push there for Rivian. If you've been seeing these cars on the road everywhere, there is plenty of juice on this bone to the upside if it does end up cranking. Remember, you got two yellows on the histogram, so John says it might be good to go. But remember, two bar professional, risk accordingly. Let's say take this bar, one or two bars right here is your stop. So there you go. Rivian Automotive looking like a whole snack and an emoji. TSM, good old Taiwan Semiconductor. Speaking of war, this is in that new ETF that's been out for essentially 3 weeks. Setup candle to the upside. If it breaks above that, you're looking at potentially a pretty major breakout after consolidation there. So unbalanced volume to the upside, earnings looking good already in your rear view mirror. We like earnings in our rear view mirror and earnings going green. Histogram is already kind of still trending upwards, so we like that as well. Major break though, so it's building orders above this rotational zone that it's been in essentially for I think like 6 months. Look at that, going all the way back to October there. So 10-14 that week, going all the way back there for like some rotational action. It's not perfect rotation. It did break it a little bit down here. We can also put that as a level, like in yellow. But really, honestly, truly, loving this. Taiwan Semiconductors, the upside. If it's getting added to ETFs and stuff like that, we could definitely see this kind of pushing all-time highs previously as well. And it's a good one to throw in your portfolio. Don't think it's going anywhere anytime soon, unless you know who decides to swim on over there and take it. But yeah, wheat. So shout out to wheat. Wheat's a real doozy. We've been telling you guys about wheat. It's been on our watch list here. But how would we play wheat if we break it to the low? Break to the low. We'll take it. If it breaks this level and it pushes down to the low, that's pretty good. Or even down the 3 ATR, that's also pretty good. What's weird is you get unbalanced volume pushing to the upside while this is pushing to the downside. That does happen sometimes. So just watch out for this. But the histogram is already starting to go kind of in the negative territory on the TTM, and there's a squeeze in play. So if we get a break for that, could be really powerful. We could see wheat to the downside. We don't discriminate, not even against wheat. So there is our hot takes right there. Those are the ones you definitely need to watch out for. Just keep in mind that some of those are a little bit more potent than other, have a lot more confluences. So if you didn't get all this, run this tape back and check out those hot takes. Those are definitely going to be bread and butter moving forward for the week. That's kind of why we're here. It's kind of why we do these Sunday plays, is kind of go and peer at our setup and let you guys know what potentially could be a good pick, what might not be a good pick. So let's go over our ETF watch list here. We look at the ETFs every Sunday because we want people to see what we're seeing in like essentially their overall ETF. What's the status, right? So we'll start with the XLB, right? We're looking at materials here, and if materials are kind of in the dumps, we're not really cared about materials because materials doesn't necessarily trade above the S&P 500 consistently, right? We are worried more about the XLK and the XLC. So like I was telling you, right? On the weekly, you see kind of materials here, kind of in a downtrend, looking red. And so when we look at DuPont DD for a potential play here on the weekly, remember this was on our hot take list. This could potentially be a good play because in line with the overall theme of materials being slightly heavy, and a lot of its key components also being heavy, right? The momentum for a lot of these is red, red momentum, and then the trend either being yellow or even in one case for the DOW red. So just keep that in mind that this is fully in line with it being a play to the downside, nice risk to reward. If we bring up DD, as we showed you on the hot take list, pushing to the downside. That's why we take that as a hot take too and take a look at this, because is the overall momentum of the whole sector going to drag it down with it, or is this Honey Badger just going against its sector, going against the overall market as well. Need some water. So yeah, DuPont in that XLB. Shout out to it. Moving right along, we have next on the list, the communication sector. So we love our communication sector. Included in that was the hot take Netflix. Remember, overall Netflix in tune with the XLC, and will anything necessarily drag it down? We have Meta looking like they wants to push the upside. We have an alert there, see if it breaks highs because it is kind of an ascending triangle. Google also. You got TTWO looking to on a double green there. Disney momentum trend yellow. So there's plenty of meat on that bone. Remember, we did make a huge killing on Carter Communications on that nice rip. If we can maintain and start pushing to the upside, that could be a good look. Comcast a little heavy though, but most of these guys, if you're looking just as a snapshot, you're seeing double greens everywhere. You get Verizon and Carter kind of weighing things down, Comcast too. But if you notice, people, they don't really watch, these things. People are on the YouTubes, they're on their phone, Instagram, Meta, Netflix, Google. They're searching stuff. Even Disney is struggling. They're into the streaming business, but if their streaming sector isn't raking in that dough, you got to let it go. And we can go look at stuff like that over here on our Qualtrum/Insight tool. We're going to take a look at Disney and see where the sector by revenue segment is, right? If we expand that, we can kind of see, well, sports, entertainment, media, parks and produce, right? So they really kind of had a switch from their parks and products. Kind of cue that out, and then we can look really at the entertainment, sports, and media. So really, we're looking at media and entertainment. That sector for media, zero, 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 zero. So I'm assuming something happened to where they're somewhere in between quarter two of 2023 and quarter three of 2023, they did something to their streaming service or media service, right? We have to go back and do some of the research on that, but excluding that, yeah, earnings a lot of times doesn't come from the media because it looks like they pick parks over media. Maybe it's in the entertainment budget there, but it's saying, yeah, entertainment 9 billion, and then you get here the sports. So Disney, I didn't know Disney did sports, but shout out to Disney. You learn something new every day. It's kind of why we do this. It's kind of seeing like, hey, what is okay, they also got a revenue by subscribers. So let's see that. Oh, they do still have it. Okay, cool. So you can kind of see what makes them the most money. Really, it's that good old Hulu. So look at Hulu there. That is insane. 95, is that million or billion? Is it a B or an M? Doesn't say. It just says Hulu is bringing in the cash. So Disney and Disney International not really doing it, but them buying Hulu really kind of makes up for that in their streaming service. They had to get a hold of that. So Disney Hotstar also is not definitely not making it shake there. But I don't know if this is a million or billion. I'm pretty sure it's a million. So yeah, shout out to Disney there, the streaming service, and you can kind of look at stuff like that. Is the company in trouble? Cash to debt? More with parks. I'm assuming you're gonna have more debt than cash, but as long as you can pay your bills, is revenue increasing? Well, it very well could be. Yep, certainly is. So that's good. Hulu's keeping them alive, right? Shout out to Hulu. Back to the charts though. It's a good way to kind of peer underneath the veil and see, well, is it dragging it down because there's a fundamentally break in something like Disney, or is it dragging it down because it's not generating revenue? What's really going on there? So shout out to the XLK and that. So go check out Qualtrum if you get an opportunity. Also, you have XLE, the energy sector. So if you're looking at the energy sector, I mean, look at that. Look at all that green that you're seeing on the chart there, right? That's because of the recent rally. We did take a play on BKR, made some really juicy profits there about a couple months ago. We have a play in OKE, and there is still meat on that bone. Remember, it broke. If we're looking at XLE, let's go ahead and pull XLE to the front of the classroom, kind of show you guys what's going on there. So you guys can see it. Did take a position from here to here, pulled it off at the first side of danger. But if it's going to complete its rotation, like the resistance being up here, there is a lot of meat on that bone. So do we believe that XLE as an ETF will drag down our position in OKE? Probably not. We also did take a position back here and made some really juicy profits on the way up for XLE. There was a lot more meat on that bone too. We just pulled it off there, but it's always good to look back and see kind of where you're buying relative and then seeing how far it ran, how much did you catch. And so are we still buying in the right spot, even rotationally? Yep, boom, right there. Not our follow through on XLE hasn't been so good, so we might need to do a little bit more following through. But if we pull OKE to the front of the classroom on the weekly, we'll do that here now. We're already doing pretty good, a lot better. Got a double green, traditional standpoint, took the buy and took the roll there, and then we're looking potentially for it to get up to 115 before we have to make a decision, essentially. So there, that is. Also, not to exclude him, EOG. Look at EOG setting up into a nice wedge formation there. So watch out for that. But COP could hold it down a little bit, and then XOM looking like a whole snack to the downside. This is kind of what you don't want to see in your plays, like a big old really big Exxon Mobil like coming in. Remember, we got a downtrend on the weekly set in here. It pushes to the downside and then rallies up into the moving average cloud and starts failing. That's what you kind of don't want to see on your setups, right? Especially if you got it played to the upside. You don't want that dragging down the whole ETF and then potentially dragging down OKE. I know it's not how that works one for one, but when people start saying, "Oh, the energy sector is pulling down," lower tide lowers all boats, right? So check that out. You got KMI just doing its own thing, man. Let me look at that. It's just in freaking flip insane. There was an indication to kind of get into that with our setup, right? You got a green candle in green territory. Wasn't too bad. It's not ideal. We like to see the red candle in green territory and then it breaks above for the play, but it is what it is there. So that's XLE for you. XLF is on the roster. Remember, this one has recently been really going into rocket ship mode. We're gonna mute that. We're gonna mute that. Hope I'm back. Hope I'm back full force. Sometimes when it does that, the volume goes haywire. But we'll bring again. Look at all this green. Berkshire Hathaway, green, JP Morgan, green, Verizon, MasterCard, Bank of America, Wells Fargo, Morgan Stanley, BlackRock, American Express, all green. So most of the sector has green. And not only that, it did slightly pull back to push, and their earnings were all spectacular or somewhat decent. So is there more meat on this bone? Yes. There's going to be some laggards seeing all these stocks in the sector push and extend. Yes. Where's the meat left on the bone? You've got some in Berkshire Hathaway, some meat on that bone. You've got some meat on the bone for BlackRock. We kind of went over that. Some meat on the bone for Bank of America if it breaks highs. Morgan Stanley, a little extended, break a high. Hopefully, it continues to really push XLF overall to where we need it to be. The overall sector. I do believe there's going to be some push to the upside. There is some stocks left in there to really give it that oomph. But double green, loving that mojo jojo right there. Moving right along, XLI. And you see, this is a good way to look at the overall market and just see, hey, like my play, my setup from the individual charts, how does it look with the overall ETFs, right? You've got that Lockheed Martin in there, major player in the defense sector, just absolutely getting body slammed. We can go bring him to the front of the classroom, see what the heck's going on there. Not sure why it's just getting a beat down. Yeah, just really solo. We actually got a stop out on this one time as it was pulling back. It was in the green territory, traded above. I think we rolled it here and then it just capitulated. So we did take the buy off of the break of the setup candle, and then we were able to take a roll and then it just capitulated. So was able to make a decision, take some profits off, but essentially just had to let that bad boy go. And there was no really other like green and red territory. It just went gradually to the downside from there. So shout out to our system for like getting out and not just kind of taking it off at the literally the first sign of danger, right? If you look at these levels here, that's what I was looking at, and I wasn't a dick for a tick for once. So I saw that, I was like, yep, first sign of danger. I put my alert there, and we got out. Can I? Oh yeah, I gotta go back to the flex creator. So yeah, XLI industrials not looking too bad. It's kind of a mixed bag though. But overall, things are just kind of going up overall. I would watch out for Boeing. Boeing is looking pretty good. Kind of yellow there in an uptrend. So nice little pullback potentially for a setup there. And that's about it. We've got ETN as a yellow. Could be potentially setting up for, oh, that's on the day. So let's fix this right now. Sorry guys, this is on the week chart. On the day chart, that's weak sauce. We like longer term setups. We want to look at things from a longer standpoint. Time in the market versus time in the market. Time in the market versus time in the market. You really got to get that drummed in so you can start thinking about plays of, hey, let me not touch it and just let's see what this play works out. That was the biggest thing for me as a trader, realizing that, hey, I could take a day trade and that's all cool. It makes really cool highlights and it makes you feel like you're part of the in crowd. But I'm gonna tell you right now, just sitting back and letting the play work out for 3 weeks is the coolest thing ever. I'm gonna tell you like this. When you go look and you like, okay, so many people trade the cues, day trading the cues and the SPY, but I can just sit here and pull in the same amount of profits that they're pulling. Just watching this thing just kind of slowly go up like a stock. Like I just bought holdings. I just bought 100 shares in the QQQ for a long term 3 week hold. That is where money is really can be made here. When you get these nice rips. And that's why we like setups inside of major ETFs. Like if we go back and look, just to bring it to the front of the classroom while we have the opportunity to, when you look at SPY, it happens relatively a lot, right? When you kind of crazy. But now you do get some stop outs here. It's not perfect. But if you're pulling back into your moving average, right? Pulling back into your moving averages, buying essentially in a statistically good zone to buy, and then you see a setup candle, I'm telling you, you're pulling the trigger. This right here is in the weekly moving averages right here. Taking this play is like music to our ears. Nice juicy rip. Does it happen again? Close to the moving average. Yep. Nice juicy rip. Shout out to it. Does it happen again? Yep. Close to the moving averages. Crosses above. Nice juicy rip. Same thing here. Nice juicy rip. Time and time and time again. Now it doesn't show here, but it is showing on, we can type it in right, the cues, right? Did respect the 8 pair moving average, and hopefully we get a nice juicy rip. If and when it crosses above the high of 524.14. So that's why we wait on that. Okay. So yeah, there's XLI, but we like to look at things on a weekly standpoint for those nice juicy rips to the upside. XLI is it's there. So just really I'm just watching out for Boeing and I'm watching out for ETN. It is double green with a nice pullback, but watch out for earnings coming up. Also, Boeing has earnings coming up as well, so watch out for that. XLK Tech, our favorite. Look at all that green, man. Except for you got Oracle, AMD mucking up the bunch there. ACN, watch out for that. Cisco, double greens. So yeah, XLK showing its worth there. Being one of those sectors that consistently performs above the SPY. So that's why we kind of like it. It's kind of proven its track record for being above SPY. In very similar story for the XLK. If you look back historically, our setup candles work really good on the major indices. Why? Because it's hard to manipulate that, and you can't just push. Even hedge funds can't just push the overall market around. So things we want to watch out for here. I mean, remember, I said I worked really, really amazingly on the Qs. Qs kind of work in tandem with XLK, have a lot of the same baskets in there. We took really good profits off on AVGO on that very nice rip. We'll bring him to the front of the classroom here in a second. We have AMD on a buy bias. If you see right here, it's AMD is momentum red, trend yellow. But why? Here, we'll bring him to the front of the classroom right now. Why do I see it as a buy bias? Because I don't AMD is not going anywhere. So if I want to get a good company at kind of a reduced price, and if AMD at one point was at 227, what's low could go lower. But look historically, am I okay with buying it at this level? Well, actually, I am, because if it, let's say for example, it breaks and we keep to our system, right? And it fails, we're failing probably down to what, this $80 level here. So $20 lower. That just gives us more opportunity to average in there. And then with the options, we can choose. We have the right, but not the obligation to take a hold of that stock. So we can just let go of the contract, sell it, probably for a slight loss, but we have the rights, but not the obligation. So if it rips to the downside, we can let go of the contract and then wait to purchase the stock at a later date. So that's why we kind of like options. It gives us that flexibility, man. It's really something special. But stuff to watch out for. We had Oracle on the board there. Watch out for that. Microsoft. Let's bring Microsoft to the front of the classroom. We need to talk about Microsoft here. So Microsoft on the weekly is looking pretty juicy as well, right? It's a play. It's in play here. But what I don't like is there's a lot of rotation in this zone, and it's still in this zone. So we needed to kind of break above where we put our alert there at 434.65. Again, the level is 434.65 on the weekly. We'll zoom in there. So essentially break above previous week's high, and previous week's high and the previous week's high. And then you got to break above this setup candle. It's kind of what we're looking at with the momentum trending to the upside. So watch out for Microsoft. That's why we wanted to bring him to the front of the classroom. Is not necessarily a hot take because of the setup, but definitely something to watch out for in the Mag 7 as well as in XLK and the QQQs respectively, right? Also Apple. I think we brought Apple to the front of the classroom. Apple is it in our hot? Yeah, Apple's in our hot take. So we already brought him to the front of the classroom. We'll also bring AVGO to the front of the classroom. So AVGO, massive push from back here with the setup. If you like catching plays from 166 and kind of letting them off at around making a decision at around 251, this is a place for you. This is a place for you guys. This is one of my probably most all-time favorite plays, not because of just a rip, but because of, look at the setup. You're seeing a double green here. You're seeing how it perches on the 21 period moving average, right, with a setup. So using the weekly combined with higher time frame analysis to lower time frame analysis, and combine that with the ability for the ETF in the sector to be pushing in a name brand stock, right, that has a juicy setup. Okay, we're going to bring him to the front of the classroom. AVGO, hot take for AVGO. Previously, hot lesson, I should say. How do we get in this, right? Nice juicy setup candle right here for that bad boy. And if we're looking back, you get be a two-bar professional, but because these are so tight, you can look back all the way back here. Unfortunately, your stop is kind of below this candle here at 144. So with being a two bar professional, kind of a low stop there, but it is what it is, right? We wanted to respect that at 254 for 2 bar. That's what I'm talking about. You can go back to this candle because essentially this is your setup. That's too tight. You can't do, there's no way you can trade. So the next candle below that is what? This candle right here. So being a 2 bar professional isn't just, looking 2 bars to the left. It's respecting that I can bend, but I can't break my rules. This is bending your rules, but not breaking them. This candle is 1-2, but it's too close to this. He comes down and just stops you out. So be a 2 bar professional, stop out here at 156. It does push. It does push there to the upside off the break, and then you can potentially take an add-on off of this break. You could take an add-on off of this break right here. We did, by the time it pushed up here, we didn't have to take an add-on. We were actually taking some off at the first sign of resistance. But because we rolled the contract instead of closing the contract, that made a lot more room to the upside. which it did do. We rolled once at the open of that day, and kind of rolled at the close or peak high of that day, and then then it kind of continues. So at the open of the next day, we rolled it again, and then as it pushed that same day, we rolled it again. So really crazy run there on AVGO. Glad we hope you guys were a part of the channel by then, and kind of stay tuned for that. So I love bringing our big basket winners to the front of the classroom, and also we're gonna have a whole class where we do our losers, so we can get some really good juicy lessons. That is coming. XLP. So consumer staples. Consumer staples is kind of a mixed bag there. As you can see, you got a lot more double yellow, double red for consumer staples. So if you're looking for something potentially in the downside, CL, you can see how it ripped into the moving average cloud. We would want to see we know Mo, kind of same thing. Ultra kind of been on our watch list. MDLZ, couple opportunities to take sells there as well. You get an opportunity for Pep, Coca-Cola, you name it, it's there. Oh, these are on the daily. Again, gotta stop doing that. Sorry, guys. We need to put this, see how it changes the dynamic when you put it on the weekly. The daily is just not it. 2 minutes is just not it either. But you need to put it on the weekly. And we're gonna save this flex grid next time too. It's still, these guys are still kind of in a downtrend there, even on their the weekly kind of momentum. Double red, yeah, double yellow, stuff like that. You know, Coca-Cola is gonna be in the red there, red yellow kind of deal. Yeah, so these things we want to put them on the weekly, not the daily. I think at one point we're looking at them on the daily. I just forgot to switch them back. But yeah, we want to put them on the weekly. Higher time frames, bigger winners. Higher time frames, bigger winners. I mean, look at that. That's disgusting. Weekly, and then weekly. Shout out to us for getting our charts squared away. We'll go ahead and save. And I just kind of showed you, yeah, I just kind of showed you how to modify your flex grid. But now it kind of changes things a little bit. You got Costco on a nice juicy pullback, Walmart on a nice juicy pullback on the weekly, Philip Morris on a nice juicy pullback on the weekly, but you're in downtrend territory, so watch out. We're bringing Philip Morris to the front of the classroom. PM. So you got PM on the weekly here, downtrend, nice rip. Okay, nice rip up into the moving average cloud. And we'll fast forward our daily. So you see here, this is kind of what we're watching out for. Philip Morris, not necessarily on a like a hot is it on our hot take list? I believe it's on our hot take list. Philip Morris. No, it's not on our hot take list. We prioritize uptrends over necessarily downtrends, but up this is in a downtrend. So in a downtrend, if you did want to have a offsetting to all your uptrend plays, Philip Morris could be potentially that play. As things start to pivot to the downside, these guys are potentially set up to get washed. And if you consider too that I think the XLP, its momentum is currently red and its trend overall is neutral, there could be a little bit more heaviness to the downside for the overall sector and then overall stock. Okay, so just watch out for that there. Moving right along, not much to see there on XLP. You do have the what's it called? Real estate sector, XLRE. So XLRE, not too bad. We also have to do the daily switch to weekly thing there. But if we just without taking too much time there, we'll just bring the XLRE to the front of the classroom. And you can already tell, like all the other stocks are probably going to be a little heavy, considered from what we saw in the bar charts. Remember, the bar charts told us that the XLRE is one of the laggards in the overall S&P 500 as a sector. So don't expect to see much on the way of the upside. You should be looking for XLRE, looking for some positions for value, looking to buy undervalued stocks in the XLRE, and looking to short stocks that have ripped up that there's no reason why they should be up there in the first place. So XLRE, that's how you should look at that basket of stocks, right? Don't look at it from a standpoint of, hey, I'm looking to just be willy nilly just because it dropped. This is still in a downtrend. Wait for it to switch to the uptrend. Some things to watch out for. We do like a Simon Property Group that has been a favorite on our watch list here. You see it's in a double green on the weekly. Nice juicy pullback, respecting the 21. We do like that. We also like personal favorite because it has the only sentimental value. This is the only stock that Q gets excited about personally, even though it's in the pooper. uh she gets excited about it because every time when she's like, hey, I know what that thing REIT is called, so I'll explain to her what REITs are. uh and she was saying, I get a dividend on this REIT called so I was like, oh, nice. uh, and how much dividend do you get? She's like, I get $1. I was like, gotta start somewhere, babe. Gotta start somewhere. So I really really like that she gets excited about her dollar, and that's sometimes all you need, man, to get the ball rolling. So shout out to and his dollar dividend. We're gonna save this temporarily, and we'll kind of push on there. But yeah, watch out for XLRE. Maybe we get a trend change sometime soon. But big fan of Simon Property Group, double green. Wells not looking too bad. This is kind of already pushed. So if you're looking at CBRE down there, that has already pushed as well. Moving right along, XLU. So we've got utilities. Utilities, what are we looking at? Double yellow here, double yellow on XLU. And it's kind of a mixed bag. You get some double greens and you get some red yellows, red yellow, red yellow, a lot of the big boys. So this is kind of one where, because it's so mixed bag, pick your outperformers, pick your PEGs and your CEGs, pick your SREs, right? Pick those because your VSTs, if it pulls back, if you ever get a freaking pullback, VST will bring him to the front of the classroom because this is the kind of stuff that we like for pullbacks. Nice setup candles and nice little rips. And the setup candles don't always have to be red. If you see it consistent where it's sometimes pushing out greens, pretty sweet. So you can see here on the pullback here, this is why we like our system. It makes for a really decent way to just systematically look at things. So remember, we want to buy the dips, right? We don't want to just take just any old setup candle. We want to buy it on the dip. So if we take, let's say, go back here, we're doing a little cherry picking, but let's go all the way back where it started its uptrend. Let's just start looking at it from where it starts the uptrend. VST, you're seeing it, right? Where do we want to start the uptrend? Not all the way back there. Yeah, we can do it all the way back there. This is a lesson portion. So yeah, let's have some fun. So there's your uptrend. That's where it starts. That's where it kind of goes green and it has established itself as green. So let's see how many times you can win on the stock, right? Let's see how many times. First pullback here. If you take that, you do get stopped out. So that's one stop. Let's see if it trends above in the first 4 or 5 candles. So there's your setup. If it crosses above the high, we'll take the play. 1, 2, 3, 4. On the 4th day, it does cross above the high. Boom. Where's your stop out? Right here. Even if you're 2-bar professional right here, you do get stopped out there. So that's 2 stops, right? Let's see if we can make up for it. We take a bar here. There's a play. Enter the play. Stop out. 2-bar professional right there. 1, 2. And then there's another opportunity for you to hop in off the break of that high or the break of that high. You can take that and then very fat rip to the upside, making up for pretty much those 2 stops there. And then kind of continue on. Fat pop, probably take a roll or take some off the table off this setup candle or this setup candle to the upside. Right from there, you can also potentially take this break of high, nice rip there, definitely making up for that as well. So your 2 stops in the middle, as you caught the rest of the uptrend for the setup, made for very, very juice profits. And if you look to the risk reward on that, it's pretty obvious when you catch those uptrends on how we take our setups. Here, there's nothing really much to do. Here, it's really far away, and the moving average is our wide, so a lower probability, but there is like a 2-day follow through. So even from a day trading standpoint, if you say, "Hey, I could take this if there's increased push," 1, and then even 2, for that one. Not really much to do here. You could see it pulling back. I would probably, knowing me, bypass that, seeing that, hey, this rip was pretty nasty and it's not really tight. We wanted to kind of pull back into the moving average. So, yes, you could take this. You're getting stopped out. We can put it on the board for like 3 wins and then 3 losses, essentially. But the losses definitely are minuscule when you take this into account. Even if you're a 2 bar professional, like down here, um, you know, it's still minuscule. Not compared to something like, let's say, for example, this. You get this position right here. You beat the squeeze. So the squeeze hasn't even set up yet. You're in the play while this before the squeeze has an opportunity to set you and give you an alert. You're already in this play, and it's already made you some profits off the break of high. 1, 2, 3, 4, 5, 6. Taking profits probably on this blowout candle here. Good indication too. And it just kind of keeps ratcheting it up. You can just keep rolling it until it does this pop, pop, pulls back a little bit, take another play. Nice juicy pop right there, and it fires off. Why are we showing it like this? Is because, guys, the setup that we develop that we like over here is a setup that just the gift that keeps on giving. You take very understandable things in the market, like buy the dip, short the rips, and it gives you a good indication on, hey, is this a good opportunity to take that dip, take that rip, take that dip, take that buy. So once you get this pullback here, you see it, boom, there you go, and it just keeps ripping. That's why we just love this setup, because look at that. I mean, it just prints money, right? Um, And then, yeah, you get some chop here. He pulls back. Let's say you want to take this play. Boom, get some chop. Get stopped out at the low. You take it again. Nice rip to the upside. Probably take some off the table there. So if you're keeping track, I mean, are you okay with taking a little bit of stop out and then catching these 4 or 5 day rips, right? There's an indication even right here to take the play. Boom. Indication to you could take this at break. Well, no, that's a gap and go. You don't get an opportunity to. But this one, nice fat rip to the upside there. For this one, fat rip to the upside there. Fat rip to the upside there. You're catching the primest time on these pullbacks for the setup, catching people slipping day in and day out. You even get an indication here inside the cloud, inside the moving average cloud, that buyers are setting up 2 green candles. You can take a buy, stop out at the low there, and then that rips too. So it's like clockwork, but it's not. And then that's why we just like our setup. We just trust in the setup. Yes, you're gonna get some stop outs. No system's perfect, no market's perfect, but using just this one stock as an example, bringing it to the front of the classroom is really good for us, and we do like bringing some things to the front of the classroom. There's no way to predict like VST, but what I'm wanting to illustrate is, let's say you get everything else correct, like you get the stock correct, you get the right time. How do you trade it? We just simplify the hardest thing. Where do you make decisions? Where do you get in? Where's your stop? Where do you take profit? Okay, made that extremely simple. XLV, a little heavier. Remember, XLV is kind of slightly struggling, so there is kind of a mixed bag there. Momentum's red, yellow, all the way across the board there. You do get an ISRG, a pullback and push. There was an indication for you to get that play, but it's a honey. This is what I mean by honey badger. Everything else is red, yellow. The one stock inside of the XLV that's just doing its own thing, that is ISRG. That is a honey badger. You're looking at a real honey badger. Bring him to the front of the classroom. So we can go kind of do the same thing we did for VST. It's going to kind of look a little similar. What was that ticker? ISRG. ISRG. Cool. Very similar story. If you notice, kind of uptrend there. Some of the best times to buy. We're not going to go through all of it all over again, but essentially, you get an opportunity here, some follow through, nice. Too wide for us. Gets followed through. You get stopped out there. Not too bad. You do get a position here. Nice follow through rip there. Same thing here. Don't get an opportunity to take that, so you got to bypass this one. Nice little 5 day run here. Nice little gap and go here. This play also nice little rip there. Good play here. Did you get stopped out? No. So you're in this play still if you can hold through the rotation for the 2 bar, respecting all of your buyers essentially at the low there, and then wham. So shout out to you, ISRG. There it is. No problemo. Uptrends, that's why we like to prioritize uptrends. The markets are designed to go up. Some of these guys are kind of failing through there, so just watch out for that on the XLV, baby. Love it. XLY, and then we'll go ahead and call it. So we got XLY here. XLY not too bad, and not too bad on XLY. Got some mixed bag here. You got Tesla in there as a nice double green. Let's bring Tesla to the front of the classroom. See what good old Tesla's doing. If it's doing anything spectacular, right? It did kind of pull back to the 8-pair moving average. Earnings are coming up for Tesla, so watch out for the 29th, same day as, you guessed it, Fed chair meeting, right? We did take a very nasty look at, we passed up this play here on Tesla. We passed this. So yes, there was a play you could have entered here and been a 2-bar professional stopping out below the low here. You looking to the left, this one's a little too tight. This one's a little too tight. So taking this one, give you a little wiggle room on that. But yeah, Tesla just ripping to the upside on earnings and then just running. We kick ourselves to this day because of this play. We did catch Tesla back here though. If we're looking on the weekly, we did catch this to the upside. Let me zoom in here for you guys. Starting back at 184. So I'll kind of show you what's possible. 184 all the way up to 270. Caught that play. 1, 2, 3, 4, 4 rolls and a close. So very similar to AVGO, kind of 4 rolls, very similar to also the QQQ. Catching these plays, man, I'm telling you, would you be okay with seeing, like, not even just catching it, like, would you be okay seeing that this has a potential to go to the moon? Would you be okay? Because even if we go back and look at this position, this is actually even before we did the setup. You're seeing that there's still an indication that you could potentially see this play kick off right here. Boom. Moving averages real tight around this area, right? Then you see a setup candle break above the high on pretty high setup candle. And then the follow through is just massive. So we got it a little early because we got the trend line break. This is one of the few occasions where we're still taking trend breaks. But we're like, we're just feeling our gut. Again, don't trade with your gut. The setup's already there. But it's your money. If you want to trade with your gut, do what you want. But we stopped trading with our gut because we found out trading with the setup is just more profitable. So yeah. HD, watch out for some HD there. It's going to rotational. Yes, it's on the daily, but just keep that in mind. Nike struggling, really struggling. And then Starbucks also looking like it could potentially want to go to the upside. We'll pull up later on the weekly, see what it's doing. Yeah, really struggling. Double yellow there on Nike, and then yeah, this is still double red on Nike, and Starbucks is double yellow. So you guys, thank you so very much for joining us. We really love having you guys here. We love going through these what's it called? We kind of love going through the overall market on Sunday. This is my favorite time to look at the markets, kind of just unwind. I'm one of the few people, people are like, you don't have to look at charts all day. I'm one of the few people that actually likes looking at charts for most of the day. I don't like day trading. I just don't like that aspect, but I do like looking at swing trading charts and reading upon good companies, especially the ones that are already done for our homework, right? Those ones that are in the ETF. That's why we're going to throw up a flex grid for war on probably the next video. We'll just build a flex grid out for you guys and just kind of show you that. Pretty sweet. But yeah, we really like checking out the charts. So yeah, man, have no fear. We're checking out the charts and we're here. So this is your boy MC Fire. We're tapping in, and you guys will see you on Monday for some day trading, maybe even some live session. So catch you on the flip side. Thank you for joining us. Peace.